Hey, this is Tim Seitz. Just wanted to wish you a happy Thanksgiving. And to celebrate this holiday, we are having our annual blowout Thanksgiving sale on all newsletters, all DVDs. Go just below this video. We're going to post the link where you can save 30, 40, 50, sometimes 60, even 70% on these DVDs and newsletters. We want to give you a little extra incentive just to study up and use this time off to really, get better prepared on your trades. So happy Thanksgiving and enjoy our Thanksgiving sale. What's up, everybody? This is AnswerStock episode number 3, and we've got 3 guys with glasses and different hats. I've got my Wolf Millionaire hat teaching you how to make money on Instagram. Superman has his Superman hat teaching you how to be invincible and wear fake glasses because he has perfect vision. And then we've got Matty Owens, the newest millionaire trader, teaching us how hair just doesn't matter in the real world. Like, he takes off this wig after this episode is done, and I don't know what's hiding under there. Matt, what is hiding under there? That's the first question of AnswerStock this week. People have been asking me, like, what's with Matt's hair? Is he hiding something? Is there like a cheat sheet under there, and that's why you're so rich? We just want to know.
No, it's just waking up out of bed. There's nothing hiding under there.
A man of few words, Matty Owens. He lets his trades do the talking. Superman, how you doing?
I'm doing really well. I just actually moved, so you can see I'm on a makeshift desk. My bed's in the background because my desk hasn't arrived yet. So it just shows the extent that I will go through to teach and talk about stocks. And
are you sitting on the floor right now?
I am, because I didn't feel like walking downstairs to do this from the kitchen table. My desk isn't here yet, so it just shows the extent that I'll go through to teach and talk about stocks. That's my passion. That's what
Superman, you moved to be closer with your kids because you want to be like Kevin Costner as a dad in Superman.
Yeah, I did. I moved from my high-rise downtown Minneapolis back to the burbs because I travel a lot, and when I am in town, I wanted to be closer. It's tough commute with the winter and the snow, so I did what's right for the family, and that's what I did. So
this is a very important question. This brings this up. Do you think that it's right what Kevin Costner did to sacrifice himself, or do you think that the human race is ready to, accept someone with superpowers? I mean, obviously you're wearing fake glasses where you don't need them to get perfect vision.
These glasses from Pearl Vision in Maple Grove, Minnesota, which give a little plug for that.
But when I asked you what your prescription was, you didn't know. So I think that you're just trying to hide and fake it.
Tell them Superman sent you. But I will tell you this. Speaking of super things that's happened in the market, I'm sure, before we get into questions, I just want to say this about KBIO, quick point, and I'm doing a video about this for my students, is KBIO was a unique situation. It was a low float stock that was heavily shorted because the company said they were going to wind down, which they didn't have many assets. And then a guy came in and bought it up, unbeknownst to everybody, and there was a massive short squeeze. That's awesome. It's exciting. There's a lot of lessons to learn from all 3 of us. But it's my point I want to stress here is do not let that throw you off your normal discipline and your normal strategy to have quality scans for stock and quality stories for swings, because you're going to chase the next KBIO. Keep in mind that's kind of a very unique situation. There are momentum stocks. I like momentum stocks with reasons. That was a very unique reason, and don't let it throw you off your normal trading game. I'd be interested in what you two have to say briefly about the KBIO situation.
Yeah, Matt, what do you think?
I mean, I think it was totally predictable. I mean, I saw it coming from a mile away.
He's kidding, everybody.
After Martin Schreckrell, or whatever his name is, bought in, you saw it coming a mile away?
Yeah, I'm just messing with you. No, I think Paul's absolutely right. It's a rare, unique situation, but there's plenty of volatility to play from both sides, both long and short. And but it is a rare bird. It only happens every, I would say maybe you have stocks like that maybe 1 or 2 times a year.
Yeah, I mean, I'd say 2 to 5. I mean, that can happen, but it's not always predictable or.
Yeah, no, I just love how people on Twitter are like, I saw it coming, I'm amazing. It's like,
yeah, we'll see that all over Twitter, how everybody called the top and called the.
I will say though
everyone
that
on Twitter was long at 2, and they just sold today at 45.
so it's interesting. So both my first millionaire students and I were shorting it around 2-ish. We all covered for small losses. And the interesting thing, I think the most interesting thing with this is that people are saying, this is why I'm never going to short sell again, because this can happen to any stock. I think that it is necessary to remind people you can short sell anything if you can find shares to short, but just cut your losses quickly. You don't have to be like, okay, this stock is worthless, it's going to go from 2 to 0, and so no matter what happens, I'm going to hold. If you cut your losses quickly, shorting is not as scary. That said, because KBIO has gone from single digits to the 30s and 40s now, you have to be a little more scared with your shorts. Even though KBIO was a unique situation, it influences other plays, other biotechs, other low flow plays. So I'm a lot more cautious on my shorts right now, just because everyone's looking for the next KBIO. Everyone's saying, oh, this is a sympathy play. Shorting stocks like MCUR, GENE, ROSG, any of these low float stocks. ROSG is spiking a little bit because it has a new big investor now too. Remember the ROSG, Superman? How much did you make on that play?
320,000 back
Very
back
nice.
when it was a reverse split. But what happened is they had a catalyst. It was a fresh reverse split, so it was a very new low float stock. And then they came out with a press release that insurers were going to cover their test in a big state, and then it went nuts. It got shorted, and it kept going. And that Tim brings up a good point. We talked about last week. This week for holiday, Thanksgiving can have momentum. After KBIO, I would be on the lookout for any small cap, especially low float, but any small cap that has an interesting news release this week has now, I'd say, a higher probability of having a momentum run because of the time, the week, and because of KBIO. And then lastly, I'll say Tim and Matt will all agree. We've heard some horror stories on KBIO, and it's not because shorting that was my take on it. It's because some people shorted and broke a cardinal rule, which is going in way oversized position from what I read. And we all three of us teach that was my major fault why I blew up many accounts is because I go way too heavy in singular stocks. And I think we'll all agree on that from what we've heard.
And I would say, a lot of people say, oh, I'm never going to short again. No one should be shorting. Anything is dangerous if you break the rules. Driving is dangerous if you blow through red lights and stop signs. You're going 200 miles an hour in a 35 mile an hour zone. Driving sucks. But does that mean that you shouldn't drive? No, it means you should drive and respect the rules. So that's why, Superman, Matt, and I, and, these other millionaire traders that you see in the chat room, we all have strict rules. And obviously we're not perfect, except for Superman, who's, just not human. But the rest of us who are human, we do break the rules every now and then, and we pay. And if you break the rules, you pay too, and you learn. And a lot of people don't want to study our video lessons or watch lists, or webinars because they're long and they're boring and they're like, I get emails, Tim, just shut up, just give me picks. That's not the way to learn. If you don't learn from us, then you're going to learn from the market. And I can guarantee you that the lessons that the market will teach you will be far more expensive than our video lessons or webinars. So you have a choice. One way or another, you're going to learn the rules of the market. You can either learn from those of us who have been there, or you can learn it the harder way yourself.
Amen.
All right, let's get to one question real quick. I have it right here for all three of us, but we'll start with Matt because he has the best hair, obviously. Let's see. How do we each find the best stocks to trade every single day? There's a lot of stocks moving. How do you zero in on the best stocks? So Matt, or best investments for you?
So there is no such thing, I think, as the best stock. It's just, one, if you're going to trade stocks, just stocks in general, you need volatility. So I look for percent gainers over 5% really. Or if I hear something on Twitter, it has some kind of macro catalyst with it. In the futures market, the market is always moving. It's more about playing either macro news that's going on, or maybe there's a news event for like oil that comes out every Wednesday. So the commodities market is a little bit different than the stock world, but if you're going to play stocks, you need a catalyst. and you need some volatility if you want to make kind of any money. And then if there's none of that, then I usually trade the futures market. So the best stocks usually have those two requirements for me. If there's no reason that I can comprehend why the stock is moving, I won't trade it, honestly. So.
Great answer. Superman, how do you find your plays?
Yeah, I have, mainly I'm doing two types of scans. One are chart scans, which are based on my own criteria for super momentum that I teach my students. And the second is more of a qualitative scan where I'm looking at sectors that are strong, I'm looking at current events in the news, I'm looking at stocks that have been big gainers in the last few days to look for sympathy trades or sector trades. So you have one is a technical scan where you're looking for charts that may be moving, and when I find those charts, I'm looking at the story behind it, and then in more of a qualitative scan, like I said, where I'm looking for sectors, themes, things that are big in the news, whether it be themes like cybersecurity, AnswerStock, etc. But so I'm doing a twofold, a technical scan as well as what I call a qualitative or the news behind the stock scan.
Cool. And those are both great answers. I'm very similar. I'm looking for volatile plays. I'm looking for the catalyst. If I don't know why a stock is moving, I'm not going to trade it because I can't, value the news because I don't know what it is and I can't judge the risk. So, ideally I like to buy earnings winners or contract winners where the company should be valued higher because of the recent news or numbers that have come out. And I like to short pump and dumps or stocks that have been manipulated higher or, gone higher for the wrong reasons. Every now and then a reporter gets it wrong. They put in the wrong ticker. I had a few of those plays earlier this year. You really want to be specific with your trade thesis. Why are you getting in? What are you expecting from the stock? And it should be volatile. If the stock is only going to move a few cents a share, you're probably not going to catch the entire move either up or down. So really focus on the big percent gainers every single day. So question number 2, this goes to Superman. Aside from cutting losses, what is your second biggest rule that you've learned?
Yeah, and that's going to exactly be do not take oversized positions. I've been very transparent about my journey to where I am today. And when I was, learning as a trader, I blew up several accounts, but it was always because I went too big in one stock and I didn't take profits. Every stock that I did do that, my thesis worked like 98% of the time. I just, really believed my diligence instead of just taking profits. So oversized positions, and that's when I hear and read a lot of stories about KBIO in some of the shorts. Every one of them, broke several rules, but it seemed to me, based on those that shared their accounts and what they lost, they went in oversized. I can't stress that enough. Some of you new traders, smaller accounts, you're impatient. Google compounding wealth and compounding numbers. There's a nice chart out there that shows you if you're patient, you're minimizing your losses, you're maximizing your gains, and you're doing singles and doubles, your account's going to compound and grow. There will be triples, there will be home runs, but that's not what you're aiming for in every trade. So oversized positions would be my, besides the one you mentioned.
Nice. What about you, Matt?
That would be my rule as well, but the other rule I like is taking partial profits. As things go in your favor, I think things end up hitting an apex and people hold on too long. And so taking profits as you continue to do well in the stock or commodity or contracts or whatever you trade or options is a huge lesson for me. I'm very risk adverse because think about it this way. If you're taking profits on the way up, and the stock comes back down to your break-even level, at least you've taken, most of your position off the table. Or, if it keeps on going, at least you have something on the table to continue to, profit from. So that's something that really has resonated with me, something that Superman also teaches, and I'm very keen on that. You'll never see me swing for the fence, and if it does happen to work out like that, then that's just luck in my opinion at that point.
Cool. Well, for me, one of the biggest rules kind of goes with Superman where you take too big of a position, but relative to the volume. I sometimes fall for, or in the past I've fallen for, I've gotten a little better, but I've fallen for the company's technology. I love it. I think that I've discovered like a gem, and that's always good. You know, people love finding new stuff, but if the volume's not there, I don't care how good a company is or how good the product is. You got to focus on price action, and you have to take a reasonable position given the volume. You know, I don't want to have, you know, a 30,000 share position on a stock that trades 50,000 shares a day. I want to keep it a very small portion of the average daily volume so that I can get in and get out very easily in case something does go wrong or something goes very right. I want to be able to take profits, and so it's constantly adapting to you know, my account size and the daily volume. So, question number 3: are there any tips for holiday trading, given that this is Thanksgiving and we have Christmas coming up? Superman, you have any holiday trading tips?
Yeah, I mean, like I said earlier, because of what's happened with KBIO and a few others, if you know, be on the lookout for small cap stocks that have positive press releases. Traders are looking for trades, and we have momentum coming back into these small cap names. I still caution you to be disciplined with your entries and your profit taking and your stop losses, but be scanning the press releases. Particularly this week. The day after Thanksgiving is a half a day, and if you go back in history, that there's been a lot of big movers on that day. Sometimes companies will actually come out with press releases on that half day. So I wouldn't, if you have the ability to trade that half day, I would recommend doing it because I've made a lot of money many times on that day.
Cool. Matt, any holiday trading tips?
I would say don't trade if you're not comfortable, if you've never seen a holiday like this. Thanksgiving tends to be extremely bullish. You know, I would just be more, if you've never traded, just stay away or watch the market if you can. Like Superman said, there have been some crazy movers in the past. Like even the E-mini S&P 500 can move, you know, 30 points on a day because the volume is low. And therefore, you know, there's not a lot of traders. So if the upside gets, you know, starts to really go, or downside, it can really move. You know, same with stocks, press releases that come out. They do this on purpose. It's intentional. And but if you've never seen it before, I would just stay away and watch and learn. That would be my tip. Don't overplay your hand. Honestly.
Yeah. For me, you know, what I like about the holidays is you see a lot of stocks just flying. A lot of crap just flies. So you have to be aware of that with the lighter holiday volume because a lot of big traders, a lot of big investors are gone for the holidays. So it leaves a lot of amateurs. And you see absolute junk rising and going exponential and or supernova. And it's just beautiful. So going into the holidays, every half day or, you know, even getting close to the holidays, be a little more long biased. But when the holidays are over and bigger traders come back and there's more money and they start saying, wait a minute, what have the amateurs, you know, pumped up while I've been gone? That's when reason comes back to the market. And so towards the end of the day, going into, you know, any holiday, I start looking for potential shorts because when the big volume and the big traders come back, they often correct very quickly. So be long biased at first and then short biased towards the end of the holiday. That is my number 1 tip for holiday trading. But thank you again, guys, for tuning in to AnswerStock number 3. If you have any questions, email admin@timothysykes.com, and we will try and answer them on episode number 4 next week. Have a happy Thanksgiving.
You
Thank you.